why not put your money to work?
Ladies and gentlemen, thanks for tuning in. I'm your host, Frank Chaparro. This is the Crypto Tape, and I am joined by my dear and long friend, Meltem Demirors at Crucible. Thanks so much for taking the time to join the program and to schlep all the way to Brooklyn.
Unheard of. We are in trying times. I'm hard up, Frank.
No, this is what happens when Solana is, trading like how it's been trading. We have to go to the outer boroughs.
Correct.
If we dip below 150, the next recording might be in Staten Island.
Nah, you know what?
The Brooklyn listeners of this show are going to be they're going to be up in arms with my disparaging remarks. No, I used to live in Brooklyn.
If we go to Staten Island, we can go get some gabagool.
You can get gabagool in all the boroughs, I'm pretty sure.
Yeah, but your gabagool spot is in the boonies, no?
In New Jersey, yeah.
Okay, Frank's been trying to convince me to get the premium gabagool.
We did get some gabagool when we went to the park
Yes.
a few years ago.
That was during COVID.
Yeah.
Yeah. We drank in the park like animals.
No, I thought it was very sophisticated. One thing that I wanted to do with the show is start with personal anecdotes. And I think the most iconic one, we can cut this from the show. It's PG, don't worry, it's not anything crazy. When you saved me in Paris.
Yes.
That was pretty iconic. I rocked up.
Why would we cut it from the show?
I don't know. I don't want everybody to know all your trade secrets.
No.
You have to keep some things proprietary.
Yeah, we were meeting for lunch in Paris. Frank rocked up. He said, I broke my glasses. I can't see. And then he tried to put his glasses on, but it was just one. They were hanging on for dear life. Just one arm.
I had I was like the Monopoly man.
Yeah, it was a monocle. I was like, let's fix you. It just so happened that I had a friend who's Parisian, whose brother owned a chain of optometry clinics in Paris. And I was like, go here, ask for this guy.
Lens crafter.
But it's the French one.
Yeah.
And you went, and within 24
hours? I had
hours.
glasses within 24 hours.
Listen.
You gave me the gift of sight.
You got to have a guy. I always have a guy. You need an ice luge, got a guy for you.
Do you really?
He'll do it in 24 hours. All 5 boroughs, baby.
That's
You
crazy.
need a cake, I got a guy.
Cake, that's
You need
less
illegal
difficult
fireworks, I got a guy. You need a market maker? Got a guy.
So let's talk about the market right now. We were kind of opining before the cameras and mics turned on. It just seems like, and this is unique for you guys because you're not just crypto, right? You're sort of sitting at, and you can talk about it, just thinking about what the future of the economy, the future of compute. It feels less exciting to be in crypto right now unless you're one of these DATs people.
I think if you're a DAT person, you might not feel that great right now. Trouble in DAT land.
If you're a DAT banker, you're probably doing okay.
If you clip the sponsor fee, you don't care. Performance is inconsequential.
Yeah.
No, I'll give you so I started Crucible almost 2 years ago now. The idea started to form, and I haven't done an official launch or anything. It's just one of these things, like a snowball. It started as an idea. But in early 2024, what I was thinking about is there's all of this energy and momentum that is going to go into the 3 fundamental sort of building blocks of human society as we know it. We have this new layer of intelligence enabled by AI, right? And in the early stage, still like iteration 1 of ChatGPT's early innings of AI. But we have this new layer of intelligence, and it consumes a voracious amount of energy and computation. And so if we look at, when I first started in Bitcoin, I sort of had this belief that Bitcoin was an inevitability when it came to the financial system, when it came to, what asset people would want to hold. I was like, Bitcoin is an inevitability. It makes so much sense to me. I sort of had the same thing as I started to see this data center economy, this industrial-focused economy emerging is AI is an inevitability, right? A future that's predicated on energy and compute is an inevitability. And so I wanted to start moving in that direction. But having been a crypto person for so long, right, the first thought I had as I looked at this was, well, these new capital markets that are going to get built around energy, computation, storage, connectivity, all of these primitives, right, that fuel our digital economy, they should be traded and built on chain. These markets need to exist on chain because a agent doesn't have an identity. They can't walk into Chase Bank and open a bank account. We have the technology. It's called crypto, right? We have Bitcoin, we have stable coins, we have all of these different DeFi primitives that can allow non-human entities and humans to trade on chain, right? And so I started to get really excited about moving in this direction. And what I've been doing for the last more than a decade now is building investment firms. So it's like, okay, I'm going to build an investment firm focused on this. And the thing that I did for a long time was venture investing. So we started with venture. And I just started deploying capital into all of these companies that I thought would play an important role in the emergence of this new market at the nexus of energy, compute, and crypto. Now we're at the point, right? It's almost the end of 2025. AI CapEx, the capital expenditure that's going into building the energy and data center infrastructure that is fueling the AI boom, has made up over 50% of US GDP growth. If you look at the stock market,
Of course.
the
If you
majority,
look at yesterday.
it's NVIDIA. It's all NVIDIA. So when we started writing about this, NVIDIA was not a top 10 stock. Today, NVIDIA is the most valuable company in public markets. It's a $4 trillion company. If you look at every single company in the top 10, the hyperscalers, they're voracious consumers of energy and computation, and they sit somewhere in that energy to compute value chain. So looking at crypto is still immensely exciting to me. But if we look at where the momentum and the enthusiasm is, it's in this new wave of hardware and infrastructure that needs to get built to unleash the next generation of software.
I think most people that are familiar with Gen AI are familiar with it vis-a-vis platforms like ChatGPT, and they can see the sort of exponential, you can see the exponential user growth for sure. You can see the exponential growth in its intelligence. To what extent are we limited, or to what extent does compute and energy limit that exponential growth? Can it keep up with the development that we're seeing within shops like whether it's, ChatGPT, Anthropic, or whomever? Is the energy infrastructure, the data center infrastructure, robust enough to keep up with these companies' demand?
The answer, in short, is no. And I don't want to focus too much on energy and data centers because this is a crypto show, and I want to make sure we talk about the crypto component. But what I do think is interesting here is there's not enough energy on the U.S. grid. If we look at the cost it took to build our modern grid, right? The U.S. grid was built over 100 years ago to the tune of, inflation-adjusted, $6 billion. Today, we can barely build a subway station in New York for $6 billion.
Yeah.
Right?
I think a lot of people don't know that most of New York, when you look at those steam stacks, that's basically just how that's releasing the heat from the steam infrastructure that heats most of New York's buildings. It's not piss. A lot of people think it's just piss steam.
It's not piss.
It's not piss.
It's energy. But if we look at the infrastructure in the United States, right, the highway system is 100 years old, and it was really one of the last big infrastructure build projects. If we look at the nuclear age, right, the U.S. ushered in the atomic age for the world. That happened in Oak Ridge, Tennessee. The Manhattan Project, right, was based in Oak Ridge, Tennessee. We have a company in Oak Ridge that now develops nuclear fuel for modern reactors, these small modular reactors. That was a big public works project. And then probably the last big public infrastructure project was the space race, right? America was the first country to put a man on the moon. But if we look at America now, right, we've offshored industrials, we've offshored manufacturing. there's this big push now with the Trump administration, with what's happening in tech, to reindustrialize America, because there's this realization that tech, this world of bits and bytes, is 100% dependent on having a cheap, abundant supply of electrons flowing through advanced semiconductors in a really advanced factory called a data center. That's the base of the entire digital economy. And so where the opportunity for crypto comes in, and again, we're in the very early innings of this, which is why I'm really excited to be building Crucible now, is crypto has sort of introduced this idea through Bitcoin mining that you can co-locate a data center with energy generation assets. You could co-locate a data center with a large power plant, or you could do what Crusoe started doing in 2018, finding stranded flare gas, co-locating a small modular Bitcoin mine.
You can take advantage of the excess energy that's not being used by the grid.
Correct. But now there's so many more sources of energy on the grid. You have solar, you have industrial batteries. The grid is seeing a wave of investing of the likes it hasn't seen in probably 100 years. And so what I think is really interesting is the future of infrastructure is not centralized, and it's not these massive deployments. It's also small-scale modular edge deployments, whether that's in energy or energy storage, whether that's in compute, data storage, data connectivity, right, in the form of something like 00 that's actually building net new fiber. So there's this sort of convergence of these ideas we've been experimenting with in crypto, and these ideas that I know from my oil and gas days, where I worked on financing really large infrastructure projects to the tune of many billions of dollars that took a long time to monetize. And these two are coming together, I think, in a really exciting and interesting way, which is why I'm so excited to be investing at that intersection.
I do want to touch on crypto, but I'm curious what your thoughts are on some of the regulatory or policy tailwinds that undergird this infrastructure development, reshoring to the states with things like the CHIPS Act, and obviously the importance of developing a lot of this stuff here in the United States.
I think the unfortunate reality
Are they moving fast enough, I guess is the question.
No, but here's the unfortunate reality, right, is historically all of the projects I mentioned, right, the New Deal, which built the highway system, the build out of the US grid, the Manhattan Project, the space program, were all government funded. Our government cannot even finance its own interest obligations today. There's over 130 trillion in unfunded government liabilities in the form of Medicaid, Medicare, Social Security. The unfortunate reality is I do not think the US government has the fiscal capacity or the political appetite to fund the build out of the tens of trillions of dollars of infrastructure that we need. It's going to get financed through the private sector. And if we look today, right, the hyperscalers, they used to be in the business of just selling compute and managed services. They're now building and operating their own data centers. They're now building and operating their own power plants. Microsoft brought a decommissioned nuclear plant back online to meet its own power needs. And so I think there is so much at stake for the private sector that they're going to be the ones that fuel this massive investment wave that's needed. And again, crypto has a really important place here and an important role to play. I think if you look at the crypto economy over the last decade, we have created out of thin air, without any real support from the traditional financial system, a $4 trillion asset class that supports trillions of dollars in annual economic activity, 24/7, 365, that settles with finality. So if we can do that in a decade, imagine what else we can do, right? Crypto has created an incredible amount of wealth and has been a forge for capital formation. What if we directed crypto's ability to do that to other really important areas that require novel thinking in terms of capital formation, capital deployment, and capital allocation?
It'd be interesting to go into some of those use cases. When you think about the $4 trillion microeconomy that exists, though, how much of it really touches the outside world and isn't just rooted in speculation?
Okay, so I think the speculation conversation comes up a lot, and I think this is such a fun one. I feel like crypto has an inferiority complex. Like we really do, because people are very self-denigrating.
But it's not like there's capital formation happening in crypto that isn't just purely speculative in nature. It's not.
Everything humans do is purely speculative in nature.
It's not building something tangible. We were talking about this with Kevin, right? You can't touch, when an ICO raises $100 million, it doesn't result in tangible goods.
It results in conferences
That's true.
and parties. There's a very robust, global travel, luxury travel economy that's probably being propped up by crypto. Like the Singaporean hotel economy is
And
largely
what were we
sustained.
talking about? Not just the Singapore hotel economy, but the fitness economy, and all of the crypto millionaires and billionaires are now obsessed with
Longevity.
longevity.
That's right.
So crypto is fueling the longevity
Yeah,
economy.
the Chinese peptide suppliers are, very busy.
The ketamine suppliers.
Probably
imagine.
the e-girl economy. Crypto is a boon that keeps on giving. But I say this in jest, but I think there is a very serious sort of undertone
No,
here.
it does reflect the broader economy, right? Like the amount of money just being made from creators, right?
But let's zoom out for a minute. I mean, when you and I were sort of spitballing before we started rolling about the state of macro more broadly, right? If you look at the economy, what I think is interesting about crypto, and I shared this a few months ago. I love making slides, as you know. So I'm always
You've
sharing.
been doing a lot of presentations.
That's always been my thing. I'm like a visual person, and a lot of times I sort of digest ideas by putting data and facts down and then seeing what story they tell, and then I'm like, let me connect dots. So we looked at this in April when Kelly Greer joined from Galaxy. She's Galaxy brain when it comes to markets. She and I did sort of a comprehensive teardown on the state of crypto markets. So if we look at crypto markets today, if we exclude Bitcoin and ETH and stable coins, crypto market cap 4 years ago in 2021, crypto market cap today, X, Bitcoin, ETH, and stable coins, relatively unchanged. So if we look at the crypto economy as a whole, there hasn't been a lot of net new value creation outside of Bitcoin, ETH, and stable coins. There's been a lot of musical chairs. So that's fact one that I think is interesting. And one thing to think about there is, where is net new value creation and additive growth going to come from outside of Bitcoin, ETH, and stable coins? You can see this with Solana, right? We were joking about Solana. Like every time I try to trade Solana, I start smoking again. It's the most frustrating coin. If we look at Solana, Solana's market cap has doubled. Price has not changed.
Yeah.
Right.
Because of dilution.
Correct. Inflation, right? Inflation's sort of persistent. And I think this is the reality for every asset. I'm not picking on Solana. And then if we look at economic activity on crypto, right, where value creation is happening, the most profitable businesses today, the Coinbases, the Hyperliquids, the PerpDexes, they're in the business of facilitating interchange. The reality is crypto is really optimized for these use cases, whether you call it trading or speculation or gambling, they're sort of one and the same. But what I think is interesting.
But the flip side of that argument is that it's also really good for facilitating transfer of value.
Correct.
In a way that's way more powerful, I guess quicker at this point.
But there's not a lot of
traditional
value
rails.
capture there, right?
No, of course not.
Right.
You have to do it at scale.
Correct. But there's always this discussion, like the majority of USDT volume for a long time was on Tron because the fees are very negligible. What's the value accretion of that activity to holders of the Tron token?
Minimal.
De minimis, right? Same thing with ETH. There's a multi-trillion-dollar transfer of value happening on Ethereum-based protocols every year. What's the value accretion to the underlying token, right? I would argue the majority of value accretion to ETH this year has been the demand sink coming from the DATs that are buying ETH at scale.
Yeah, which is probably the case for most tokens.
So the other thing I want to quickly talk about is, we've been doing this for a while. 5 years ago, the conversation was, the institutions are coming and the institutions are going to buy crypto and the tokens are going to go up and it's going to be great. The institutions have come, but the takeaways are not that crypto is fitting into TradFi. In my view, TradFi is becoming more like crypto. If you look at volatility in the stock, retail today trades like they're gambling. You look at the momentum names in retail, they trade in a way that would make, a shitcoin trader salivate. There's so much volatility. If you look at the underlying companies, if you look at the things that are getting listed in public markets, it's a wide open field, and there's a lot of assets that are trading on public markets with a lot of momentum and a lot of velocity behind them that are objectively the TradFi version of a shitcoin. So I think instead of crypto markets growing up and becoming more TradFi looks at crypto and they say, that's nice what they're doing over there. TradFi has become more like crypto and has become much more degenerate. And we could go on for a long time to try to untangle what the underlying reasons for that are. But I do think as we look at the future of capital markets, the world looks a lot more like crypto than it does like the past of traditional finance.
Yeah, well, let's go through some of the elements that undergird that trend, right? You have in the post-COVID world, and this is what you'd see talked about on a lot of different types of podcasts.
I think Travis Kling, right? Let's take one of our own internal to the crypto industry. Travis Kling from Ikigai wrote a really long piece that got a lot of distribution on financial nihilism.
Yeah, exactly.
Right.
I mean, well, the bottom line is that it's very difficult at this point because of the cost of everything on even a $200,000 salary to grow any wealth.
So you gamble.
Yeah. And
what's a great place to get? Like when I show normies the fact that you can trade 50x leverage in crypto, there are now on Aster, you can trade hype with 300x leverage. Nice little chess move there. It's crazy. But also the future looks more like crypto than the past of TradFi. And I think a lot of people have a really hard time internalizing that.
Why do you think crypto, you've been here since 2012 or 2013, and when you hearken back to those Hasleon days, was it nihilism? Was there a degree of nihilism that sort of shaped the market structure in that way, or was it more of a financial libertarianism?
I think it's easy to...
Because I don't think it's like Robinhood executives or E-Trade executives are like, we want to look more like crypto per se.
No.
Something's pushing the market into that direction.
I think it's consumer preferences, right? Today, I mean, when I started trading, I had E-Trade. That was the big step in the right direction. You used to have to call your broker to effect a trade. Now you have platforms like E-Trade. Then you saw the proliferation of trading platforms, the iPhone, new form factor, right? I'm walking around with a phone in my pocket. Like, I still don't trade crypto on my phone because it scares the shit out of me to have crypto on my phone. But there are people who are just trading up a storm on their phone. Yeah, you're going to...
I'm going to check.
He's going to launch a shitter on Pump Fun. Did we hit the bonding curve? Let's launch it now. So I think there's the technology trend, right? And all capital markets are like this. If we look at the history of oil trading, I just wrote a long piece about the history of the oil market and what we can learn about the future of energy and compute markets, right? Oil used to be a physical market. Then we saw the facilitation of a spot market. Then we saw the facilitation of a futures market where you had physical delivery of a barrel of oil. And then the real step forward that allowed for just an explosion of the size of the market was the introduction of a paper contract, right? That didn't require any settlement, that you could roll sort of in perpetuity. And crypto has taken that to the next level with the introduction of the perpetual swap, right? And so I think in capital markets, you always have these two sort of forces. One is technological innovation, both in the form of the form factor, but also market structure innovation in the form of the contracts and the settlement mechanisms, the clearing mechanisms. Crypto hasn't even started to touch margining, by the way, yet, right? Like liquidity in crypto is still highly constrained because of the sort of practice of over-collateralizing. And now we're starting to see people going after that, and like the ability to use your collateral more effectively could expand the market size of crypto exponentially. We don't even have that yet. Like, there's gonna be cool stuff that happens there. And then the second always in trading is you see-
And there's no credit.
There's no credit really, no. Since the blowout of the credit sector, right, with Three Arrows, FTX/Alameda,
Genesis.
DCG/Genesis, there really has been anyone that's
BlockFi?
Well, that was very Celsius.
Yeah.
The whole credit complex blew out. There really isn't that much credit in the crypto space now.
Yeah, and I think of that as a really big tailwind because you look at all-time
But
highs.
we're going to do it again. Time is, if there's anything I've learned in my short 15 years of working, it's time is flat circle, and we're going to do it again. We're going to over-lever, and we're going to blow the fuck out.
Yes,
it's happening
but
in the data
hopefully-
center economy.
Hopefully, there will be more robust checks on credit robustness and worthiness.
The bubbles are just going to keep getting bigger. I mean, you look at private equity right now, right? If you look at the news cycle right now, there's a lot of skepticism around the ability for private equity to monetize at the values at which they're marking their books. There's huge crunch coming for private equity. Everyone talks about the crunch in venture, right? To realize liquidity on these very marked up positions. Crypto doesn't have that problem outside of, I think, tokens that launch at low float, high FDV.
Yeah.
People mark their positions like, okay, how are you going to sell this into a market that's doing like 2 mil volume a day? It's not realistic.
So how would you break down, because you do have a good perspective on the market structure. There's no credit market. There's really not that much of a secondary market for crypto trading. I mean, the number of hedge funds that trade in the secondary market, I mean, they're all below like $500 million.
A liquid fund in crypto is very hard to do.
And the market's fragmented.
It's very fragmented. I think in 2017, I helped seed a liquid fund that was deploying like an arbitrage strategy, a quantitative arbitrage strategy, and another one that was doing a Bitcoin arbitrage strategy, and both blew out within 6 months.
Yeah.
So I learned my lesson, like discretionary alpha and like arbitrage in crypto is hard. It's just a really, really tricky space. And there's also clustering around consensus trades, right? And we see this in venture and in crypto markets. We also see it, by the way, in public equities, right? The trade this year was NVIDIA. The trade last year was NVIDIA. The trade this year will be something kind of in the semiconductors, energy space. And if you're not in those trades, it's really difficult, right? That's why it's so funny, like NVIDIA earnings have sort of taken on the religious fervor of FOMC meetings.
Totally.
Right? You're like, okay, the entire economy is dependent on Jensen on the earnings call. Is he going to
Protect him at all costs.
Exactly. But I think the same thing is true everywhere. And that's the hard thing, is there's not enough returns dispersion in crypto for you to deploy in size.
That makes sense. And that's why they're all so small. So why don't we just all go trade NVIDIA all day?
Honestly, I don't know why people don't. We are seeing that. I think we're seeing a lot of retail fatigue with crypto. I think we're starting to see there's a lot of alpha everywhere, frankly. This year, some of the things I thought were really interesting in public markets, the IPPs, the independent power producers, have traded really well. Nuclear names have traded really well. There's a couple of tickers in the nuclear fuel space that have done really well. Critical metals have traded gold. Gold has traded really well. We've been trading gold with leverage. Like, that's been really...
On Ostium?
Of course. Ostium's a portfolio company, and I love them. We've given them a lot of product feedback. I think that's the other thing that's really important, is whenever we invest in something or look at investing on something, we get on chain and we use it.
Yeah.
Like, I want to deposit money into, and I'm using my own capital for this, not LP capital, but I'm like, okay, what's the flow like? How easy is it to deposit capital? Okay, I want to put this position on. How easy is it to affect the trade? I think it's really, really important to do that. And then obviously to kind of try to connect the dots for founders.
So when you look at the intersection of crypto and AI and compute, how does the growth of artificial intelligence kick value to crypto? Is it the AI agents? Is it decentralized storage? Is it sort of banking these AI agents?
I think this is still an open question. So I think in Q2 and Q3 of 24, but really Q2 of 24, crypto is great because we love to create self-fulfilling prophecies.
Like what?
Really good at that. So in 2024, everyone's like, oh, the market's going to come back later this year, so we're going to deploy a lot of capital in Q1 and Q2 before the market gets hot. And so what happened? Q1 and Q2 were just insane. And Q3 and Q4 were pretty disappointing outside of the Trump bump that we got around the election season. We like to just take the future and drag it into the present and mark it up like 100x. So last year in Q2 in particular, we saw frenzy to invest at the intersection of crypto and AI. What's so interesting is the majority of the companies that emerged during that era that raised at, multiple $100 million to $1 billion valuations to bring AI on chain are now not doing crypto at all. They're pure Web 2 AI. Or they launched something half-assed to get a token out. Like I'm thinking of like the IONets of the world. And I've really struggled because there's no meaningful adoption for an on-chain sort of AI platform. Even the AI agents like Eliza and some of these others had some brief attention, but have really fallen off. I mean, look, there are interesting ideas, but AI is in its nascency, and the intersection of crypto and AI, like how does putting it on...
What does that mean? When someone asks you that, what does that mean?
Crypto and AI?
The intersection of the two.
Well, nobody knows what it means.
That's why I'm asking you.
Well, so I think there's two ways to look at it. When I look at the intersection of crypto and AI, I'm not looking at putting agents on chain yet.
Is it that verification layer to know? Is that bullshit?
I'm stupid.
Yeah.
Okay, I have like a tiny brain and I can only handle so many things at once. We're not doing decentralized training. We're not doing decentralized inference. I think AI itself is such a nascent industry. Those things may happen over time, but I always like to think in terms of time scale. If I'm deploying capital today, I want to deploy into things that are going to be monetizable, right, over the lifespan of my fund. I can't really spend the next 20 years waiting for a theme to materialize. And you do need to have sort of an idea of where the trajectory is going to go, right? So I picked a directional heading, and now I'm trying to navigate towards that directional heading in the most efficient, like capital optimal way possible while realizing the greatest returns possible. So when I think about what's interesting about the intersection of crypto and AI today, I think it's how do we create markets for energy, computation, storage, and bandwidth on-chain? How do we create ways like aggregation layers? If I think about it, it's aggregation, right? How do we surface all of these resources on a global network? So that's aggregation. The next layer on top of that is orchestration. How do we actually start directing things intelligently? Then it's optimization. Right now with optimization, what I think is interesting is people who have excess GPU capacity can sell hours in marketplaces like Prime Intellect or Akash, right? That's optimization because you have an asset you paid for. You have a data center that was very expensive to build. Utilization rates are dropping, right? If you're an investor in the PE space into data center credit, you're going to want to see high utilization and high monetization. So I think this opportunity to optimize profitability using a distributed compute marketplace is interesting, right? And the neo clouds, I think, are all exploring with this in different ways. Some of it non-crypto, some of it crypto. And then the last layer that I think is still quite far away is financialization. And there you have people experimenting with creating perp dexes to trade compute forwards on chain, cash settled or stablecoin settled, compute derivatives, energy derivatives. I think the financialization step is still quite far away because we don't even know what the aggregation, orchestration, and optimization layers need to look like. And so for us, part of the question is, how do we find those founders who, A, understand the underlying, right?
Yeah.
And have a cogent...
Or understand this problem of sort of value not being tapped.
But we're still so early. Like, as interesting and exciting as the frontier of AI is, the reality is the ability for us to integrate AI into the economy at large is still quite constrained, right? Most people have never interacted with ChatGPT, or if they have, it's the free version. There's a really cool chart that actually showed...
I feel like it's getting worse.
It is. Well, ChatGPT utilization, right? In June, when kids left college, ChatGPT utilization dropped like 40%.
Really?
Yes. But if you look at the way...
But I also think that part of the issue is that the prompts, people are getting lazier with their prompts.
Oh, the way I use Perplexity, like Aubrey Strovel and I, we're having a fun argument about this, is do you start a new thread for each prompt, or do you just...
Yeah.
And I'm using Perplex. I'm just
going in it, yeah.
Mine to... I don't even ask a question. I just type in a random string of words. and I
then
see what comes out.
Have you noticed you're getting more frustrated with it?
No.
I'm getting more, I'm like, why don't you understand my thoughts? Like,
And what are you asking your agent?
no, it's more so like if I do keep it in the same thread, like clearly I'm asking about a few questions ago and it thinks I'm talking about the most recent thing. And it's like, dude, you should know that I'm not talking about.
But we're not there. I mean, this expectation that we're going to create godlike intelligence, I think, is somewhat overly optimistic. So I think when it comes to AI, right, there's just a lot of uncertainty around direction. I'm not a researcher, right?
Yeah.
I don't build foundational models. I'm this person sitting over here looking at markets and looking at trends. Okay, and here's what I know with certainty, 100% certainty. We need a fuck ton of energy. We need a fuck ton of compute, storage, and connectivity.
To make it work.
Right. And so as an investor, what am I going to spend my time and energy on? It's like, I know with certainty for AI to succeed, right? And for this next wave of technology innovation to succeed and all of these startups getting funded with billions of dollars at $100 billion valuations, for these to succeed, we need more energy, we need more computation. So you're catching this massive wave, but you're investing in the underlying value chain.
The supporting infrastructure in it.
I don't care what happens at the model. It doesn't impact me.
Yeah.
There's just persistent demand. And it's the same thing with exchanges, right? It's always going to be a great business model because there's always going to be demand for interchange and payments and these fundamental building blocks of any market.
Credit cards.
They're just these things that are really, really durable for which demand is inelastic.
Mm-hmm.
And frankly, right now, like, they're price insensitive buyers.
Yeah. So how much of that thesis that you have, of which you're 100% certain, overlaps with the decks that you're seeing funnel through into Crucible's inbox?
I would say we invest in both crypto and non-crypto startups. The non-crypto startups we invest in have to be crypto adjacent in some capacity, meaning you could embed stablecoins, sort of settlement rail.
What are most people doing that you're like, this is dumb, that a large number of people are trying to do?
So I think one of it's not that it's dumb, it's just that it's challenging. A lot of compute markets. A lot of compute markets, which makes sense intuitively, but compute is heterogeneous, right? It's not a homogeneous resource like a barrel of oil. And so I think you need to first invest in the infrastructure layers that can help make compute more homogeneous and fungible, right? The thing about Bitcoin mining is a Bitcoin is fungible.
Sure.
Like an exaflop is not fungible, right?
Explain that.
It's a unit of compute in AI, right? So I think this idea, it's conceptually the right idea. We're just a few iterations too early, and there's no thought given to how you take something that is not consistent, not standardized, and create a unit that is standardized and tradable out of it, right? So directionally correct, but how you get there is wrong.
Yeah.
And we could be proven wrong. I'm actually writing a big piece on compute markets and what I think needs to be happen for compute markets to be possible. I just talked to a senior in college about this, and he was smarter about it than most founders I've talked to. We're going to weird places to find people. I think I'm very tired of DATs. There's nothing fundamentally interesting to me about a DAT. It's just a mechanism, right, to create sort of demand in a market for an asset that may not have a big natural bid today.
I'm sure you can appreciate it just from like a financial engineering perspective.
I can, absolutely. But for me, I don't need to spend my time on it. There are a lot of people who are really good at that and find it exciting that are going to spend time on it.
There are people who love DATs.
I know, and I'm really happy for them. I don't want to trade them. Like, it's just not for me. I think there are other things I want to spend my time on. The other idea that I think is sort of tiring is like everyone wants to launch a perp DEX. Everyone wants to do perp DEX. And there's very little differentiation. I see a lot of implementation for some reason. People in crypto are obsessed with central limit order books on chain, and I don't know. Clobs that I'm like, what? Why? Like, we have the technology to do different things, like dual batch auctions. Like, you can experiment, right? As opposed to just, hey, we're going to take this TradFi approach to the clob and put it on chain. But generally, I would say I'm always happy to talk to anyone. There's certain things like, I don't do gaming. I don't know anything about gaming. And I have no business investing in it. Consumer, it's not really something I'm good at or know that well.
Yeah, you're too serious for that.
I don't know that I'm serious. It's just, I think such an important thing is like focus on the things that you understand and are good at. And I'm just not good at certain things. I don't know.
How is the woodworking going?
The wood, my warehouse filled with wood.
Yeah.
It's going really well. I just made a piece out of the wood. I found a great fabricator and it's really beautiful.
That was like your sort of like garden leave was really like a
I got really
lumber leave.
Lumber. Yeah, I got into lumber and weightlifting. It was an interesting time in my life, Frank.
Is there any overlap between furnishing and venture investing?
Yes. So I collect vintage furniture. It's like one of the things I really enjoy
I don't even
doing.
know if that's the word, furnishing, for furniture enthusiasts.
I'm a chair slut, as I like to say. I love a nice chair, sofa. I'm like a 1960s, 1970s person. It's identifying what trends are before they become trends. Like I started buying tapestries 2 years ago. Now tapestries are hot.
Got it.
I started buying certain types and designers of sofas a while ago. Now they're cool. I got into brutalism, right, in 2023. Now brutalism's like all the rage. It's the same as crypto.
Spotting trends early.
Yeah, spotting trends early. It's not enough to spot the trend and call the trend, though. You have to put your money into it.
Yeah.
Like I spotted the Terraza probably 5 years. The Terraza is a famous 1970s sofa. I saw it 5 years ago. I loved it. I didn't buy it. It 4x'd in price,
Doesn't
and then I
count.
just paid the 4x in price for it. I've been collecting. I've been cornering the market on et cetera chairs.
And they're all in the warehouse.
No, they're spread around.
Yeah, and your empire properties.
No. I just have simple. They're spread around. I'm going to start giving them
They're
to
decentralized.
I think the joy in these beautiful objects, though, is just they're supposed to be used. They're not supposed to sit in a warehouse.
Yeah, of course.
They're supposed to be used. But I think it's the same thing in venture. I think in crypto, what we get a lot of is people love to take victory laps, right? I saw a trend early. I used to be like this. You see the trend, you call the trend, you tweet about it. You're like, oh, I tweeted. That doesn't show me your P&L, right? And I love what Dan Mashevsky at CMS says. Do you want to be right or do you want to make money? Being right is one thing, but winning in venture and winning just generally in life, it's not about being right. It's about what's the measure. And in the business of investing, it's making money.
Show me the P&L.
Show me the P&L. And that's hard because—
Jerry Maguire, show me the money.
Show me the money. But that's hard because I think it's easier when you don't measure.
Yeah. It's more difficult to be honest with yourself generally.
Yeah, but that's where the growth is. And I find that when you're able to be honest with yourself, you have a lot more empathy for people who are trying to do new things because it's really, really hard. And just to do a very basic thing that hasn't been done before, for which there's no market, you need to have so much momentum that you are able to overcome the inertia surrounding you. I think about Shane Copland at Polymarket, right?
Yeah, of course.
I met him in 2019.
Did you go to the office in Soho that he had?
Yeah.
They were all sitting on the floor.
Yeah. So watching Shane go through that journey and seeing him build that business and just the sheer amount of force of will needed to make that business work, right? Year after year, everyone else around him in crypto is making piles of money on NFTs and exchange and this. He's just dogged and has this vision. That is so hard to do. And you see it now, right? In crypto, people are doing a thing. It's not working. It's not getting immediate traction. They pivot. They're like little rats in a maze, right? And this is kind of how I feel while building Crucible. When I first started building it last year, I would talk to people and they were like, I don't know what the fuck you're talking about. Like data centers, energy, what? People didn't get it. And I felt like a crazy person, but you kind of put on your blinders and you just have to believe so strongly. It's the same thing with people in Bitcoin early on, right?
Yeah.
Like when we started DCG.
Or Theranos. People think you're crazy and then
you just keep going. And you might be crazy. That's the other part that's kind of messed up. You might be crazy. And if it doesn't happen, then like you're up shit creek without a paddle, and you've just spent the decade of your life and all this social, financial capital on something that just...
But that's the risk.
Yeah, but that's why you get the reward. And I think that's the one thing people don't appreciate is it is really, really hard to see something other people don't see, to direct all of your energy and effort towards it, and to keep going even when it gets really hard. And it's gonna get hard. What I'm doing is going to get hard. There's gonna be a credit bubble, shit's gonna blow up. Like over-levered data centers are gonna implode, GPU depreciation curves might accelerate. Like it's gonna get really messy and it's gonna get really hard. So I just have to have, that's why my logo is a cross. We just have to have the belief and the conviction to keep going.
There you go.
I feel like that's what we did with Bitcoin. We're gonna do it again.
Everyone has their cross to carry. Meltem, thanks for
Right.
taking the time.
Thanks.